I've been in sales for, a decade, right?
Yeah.
I could jump in and make something happen. And also I will say in this business and insurance, this is like one of the only businesses that I know of where you can come here with minimal funds and actually, find success and be profitable. Most businesses, you can't even be profitable until, well after your first year. Here you can be profitable within your first month.
Yeah.
So,
or first week.
Or first week, within your first week. Yeah, exactly.
So, without further ado, I'm fired up. Grady Paulson here, Family First Life America. Beyond excited to have Ryan Manrique and Morgan Rosenow on with us today. Ryan, let me start with Morgan. Always ladies first. Morgan is an absolute doll. She cares about her team more than anybody I've ever met. Spends countless time on Zoom, phones, etc., putting them in a position where they are confident with the products they're selling and confident with the script, and also produces at a high level. Her best month is 33 families protected. Ryan's an absolute sales beast. Best month, 83 families protected. Just huge numbers from a guy who wants to make it happen, but they have an interesting background, having come from a different financial space. Mm-hmm. Economy changed, market changed. They didn't roll over and, let society dictate where they were going to live, what they were going to do, and how they were going to grow. They found insurance, and now they're making it happen. So I'm going to pass it over to them for a little bit, and give us some backstory or how are you guys doing today? There we go.
Great. Yeah. Thank you for having us here, Grady.
Doing great.
Oh yeah, for sure. Give it the fist bump. So yeah, no, just a little background. So, I'm actually somebody who dropped out of college. School wasn't really for me, but I always knew that I wanted something more. So I ended up getting into sales at like 19, 20 years old. So I've sold everything from, jewelry to watches, personal loans, debt settlement, cars, everything. And I ended up getting into mortgages for about 6 years. And I made good money, right? But I realized, every few years, the market just goes up and it goes down, right? So it's very, very cyclical. And the income is great while it's great, but while it's not, right? So I'm a firm believer that, you can work as hard as you want, as you can, but that's not going to make you successful, right? What's going to make you successful is hard work with the right vehicle. So that's kind of what brought me to FFL. Was Morgan came here. She was kind of my, my test dummy. She came here, my guinea pig.
I was the guinea pig.
Good.
And
Sent me in first.
I just saw some of the success that people had here. I saw that it wasn't cyclical like mortgages. And so, that's what attracted me, and here we are.
It's awesome.
Yeah, I was kind of the opposite. So I initially was supposed to go to law school. That was the whole plan. Obviously didn't do that. But COVID basically hit right when I graduated. So kind of derailed my plans. And I was kind of like, all right, well, I have to do something. And Ryan was like, hey, I think you'd actually be really great in sales. You should, go into mortgages for a little bit. At the time in 2020, that's when rates went crazy. They went down to 2%. Everyone wanted to refinance. So getting hired wasn't super difficult. That's why they let me in. So I went in, I got hired, and I actually found that I was pretty good at sales. I was really, comfortable on the phones, talking to people. So, I was doing really well, but he can attest, I did not enjoy it. I was, not having a good time doing it. So, I was young, I had, some money in the bank, and Nina reached out to me and was like, hey, I think that you'd absolutely crush, insurance. So I was like, hey, don't have kids, don't have a mortgage, don't have anything, might as well go test it out, and sold a lot of Betty's. So he wanted to come and join me. So that's basically, how I got here.
Very cool. Very cool. So give me just like for those that are new to sales, right? Give me the more story on mortgages. Like what's the sales cycle? How do you get leads? Like how long does it take to close one? Mm-hmm. Because it can be really lucrative, but it also, is, as you said, adjusted by the market. So give just some more for those who don't understand how all mortgages work.
Mm-hmm. Yeah, those are some great questions. So with mortgages, leads, I'll start with leads. So if you're, and I was running a mortgage branch before I came here, and just per month on leads, we're spending like $300,000 a month. So there's a massive amount of overhead. And if you're not profitable, you're out a lot of money, right? The sales cycle in general is going to be, on average, I would say about 30 days. Sometimes you have loans that could take up to like 60 days to close before you're getting paid. Sometimes you're doing 60 days worth of work on something that falls through last minute because a notary doesn't show up, and now you don't get paid at all.
Happened to me.
It's happened to me many times, right? So, and the other thing is, there's so many different people working on one loan, right? You've got a processor, an underwriter, a notary, an appraiser, a closer, you. There's so many people with their hands in the cookie jar, and if one person messes up, it just kills your entire deal. So that's something I really liked about coming here too, is that the sales cycle is much faster. You're getting paid very quickly, and it's just you and the customer.
Yeah,
that's it.
And from a business perspective, standpoint as well, that was kind of what really made me make my decision to come into insurance, because the goal is always to end up working for yourself at some point, especially if you have a high level of success in sales. You want to get off of the treadmill, so to speak, right? So when I saw him, that's kind of the golden, mountaintop, right, is to own your own mortgage branch, and seeing how if a couple things are thrown off and how much money you're spending, like how intense you have to be about hitting those production numbers and everything like that, that you're $1 million plus in the hole before you're even out of the red. That was something that I was not comfortable working towards, right? I was like, okay, maybe that's not what I want to get to. And even just being a loan officer, right, you're looking at your progression up. If I move into management, I saw him in management and I didn't see him enjoying it, right? I didn't see him moving up as far as income goes, right? He was making less, working more, not as happy. So for me, I was like, okay, I can stay here and I can be subject to these cycles of, rates going up, rates going down, my income changing, to eventually get promoted to a manager, only to have that get taken away the second the market changes. Now I'm right back to a loan officer. For me, that didn't feel like a career, right? That just felt like a gamble. So that's why for me, I was like, okay, I can take a chance and do something like this and really, really build something that I don't have to worry about, the second that rates go up. So that was the biggest reason for me, was seeing kind of behind the scenes of how that operates. And you're also kind of capped, right? If you have to pay processors, underwriters, right, like he said, all of those people are 100% needed for that one loan to fund, right? So you really have a cap essentially, because you only have so many processors, so many underwriters, so you can only have so many loan officers writing so much business for those to actually go through. So you have a slower rate of growth that you can expect, more expenses. So seeing this model, it just seemed too good to be true. I mean, for how quick you can scale it with, how comparatively little investment.
That's awesome. Wow. I don't think I didn't know that. All of that. I dealt with one girl and all this, then 45 days later we closed and I didn't have to make my first payment for 60 days. I was like, that was cool. She's like, yeah, you don't have to make your first payment for 60 days. I was like, that was great, and then you kind of learn how that works. But so $300,000 in leads. Can we spend a second on that? My jaw hit the floor.
Casual drop.
How does that, what is that from? Are you buying steak dinners for realtors? Are you doing mail drops over new subdivisions? Like, how does that even get to that number?
Yeah, so we were a consumer direct model. So we were basically just purchasing live transfers, things like that for our loan officers. And so they're very expensive. I mean, they can be, $150 a piece.
Okay.
And when you have, 30, 40, 50 loan officers, that just becomes very, very expensive monthly. So
fascinating. So, I mean, we have live transfers and insurance, kind of probably, I don't know how comparable that is, but yeah, I mean, but to hear that's fascinating. So you ran a big branch, which means, you were doing well until, and I don't want to bring up, bad news, but how did the gradual increase of interest rates affect you? Like, what is that? What's the immediate? Do people just kind of, this is what it is? You still need your house, Betty, right? How do you work through that?
So I was in the industry long enough to know what was going to happen.
Okay.
And I started to see what was heading my way. And so I actually left at the perfect time and I knew I was, jumping into the unknown, right? But I was like, okay, I know if I stay here, I know what's going to happen, and I don't want to go through that again. So I'm going to just dive into something where I see people making success, where I know it's a good vehicle for success. And I know with my skill set, if I jump in there, I've been in sales for, a decade. Right?
Yeah.
I could jump in and make something happen. And also I will say, in this business and insurance, this is like one of the only businesses that I know of where you can come here with minimal funds and actually, find success and be profitable. Most businesses, you can't even be profitable until, well after your first year. Here you can be profitable within your first month.
Yeah.
So,
or first week.
Or first week. Yeah. Within your first week. Yeah, exactly.
Absolutely. Yeah, that was a big attraction point, for us, and that kind of plays into the agency side as well, right? And I think a lot of it was, for us, we were just so happy, like, wow, I wrote a 30-minute application, and I have a deposit 2 days later. I'm not having to, because at the height of the market, when things are, really busy, you're not, 45 days is, like, short, right? You're looking at 60 to 90, especially if you're, working at a bigger company that's, pushing a ton of volume. So there's always going to be that, really everyone knows in mortgages, that first 3 months you start at a company, you're, getting pennies, right? You're just kind of trying to make it. Yeah. Ramen and eggs and, peanut butter sandwiches until things start funding, right? So that first 3 months, like you're making next to nothing. And when it comes to, later on as a producer, I saw him managing a pipeline of 150 plus people.
Wow.
You can't really be on the phones at that point, you know what I mean? Because this person's appraisal, went awry. Now you have to resell it and all these things. So the pipeline management was really the biggest thing that was such a nice reprieve, because you can just be front end focused really all day, every day. So your income potential is just a lot higher because you're not having to be kind of changed to this pipeline of people that needs constant attention. For us, we hated vacations and mortgages because the whole time you're just anxious, like, oh, what's going to go wrong? My voicemail is going to be crazy when I come back. So, just the flexibility that this offers was just, a breath of fresh air for us.
And so just for comparison, say it's a $300,000 house. What is a ballpark commission a mortgage broker would make on that?
Probably
new broker, new mortgage loan officer.
Really depends on the company you're at. But
yeah,
ballpark,
I would say
average.
Probably around like $1,500 if you're working in like a consumer direct model with like an average comp.
Okay.
The other thing about mortgages though is it's tiered. So the thing that's really nice and simple for us within the insurance space is you have a commission rate, you have an advance, and you know exactly what you're going to get.
Yeah.
With mortgage companies, most of them are going to be a tiered commission. So, if you have some loans that don't go through and you fund in a lower tier of volume, that means that your commission on everything is lower.
Really?
Yeah. So that's why that answer can kind of change, because if I'm funding a ton of loans, I'm going to make more off it, which is an incentive for you to
sell and make sure they all go
fund
through.
more. But when you're not the one who really can get it to the finish line, because a million other people have to do their job, can be kind of tough to hit those metrics, and then everything is paid at a lower rate. So that was another thing as well, is you don't really even know what to expect every month because things change so frequently with your pay.
Got it. Yeah. So, hypothetically, average home in America, $300,000-400,000, which seems high based on, my first house was $158,000 in 20. When did I buy it? Off Southern and Mill, right? That was free off back in the day. But to see that and then to go, okay, so it's 30 to 45 days. 7 people have to touch it. I'm fingers crossed, $1,500,
yep.
Right? Versus you sell a policy for $112 a month, $120 a month, and you get paid tomorrow.
Right. Yeah, exactly. You see why we made the move now?
No brainer.
So there's interesting. That's interesting, right? So I think that there's like a sexiness of homes that architecture and Ryan Serhant and $1 million listing and there's this like insurance almost seems like something that your parents talk about, like car insurance and homeowners. Like there's just this antiquated thought process around insurance versus real estate and mortgages has this it's on the news more, right? How often is anyone on CNBC or MSNBC talking about interest rates or insurance rates, and no, it's just like this old $1 trillion industry that's paying all this money out that no one really talks about. That sponsors golf events, right? Like that's insurance, and then mortgages are like, ooh, mortgage rates, and like it's just like a thing that is always on the news. So like it's like a buzzword, that, and then real estate and all the properties and rent and all the things. So I hear that, like, it's like people, I think there's this youthful desire to get into real estate or mortgages if you want to be an entrepreneur versus insurance, or there has been. And now that's almost like the tides are changing, like the educational factor is changing. People go, so I go protect a client that requested coverage and I get paid on it in a day or two, and they're happy and I get paid for it, and it's a great company, and that's pretty cool. So, okay, I'm not saying anything you guys don't know, which is awesome. So, so like if there was any other mortgage loan officers, what's the right nomenclature? Is it mortgage broker? Is it loan officer? What is the right title? Is it all is it all attorney and lawyer?
Whatever you want. Yeah. Loan officer, licensed mortgage loan officer,
loan originator. There's a couple of them.
Got it. So if there's any out there still hanging on, trying to just be panhandling at the BNI meetings right now, like, what would you say to them? To advice about what they could do or accomplish, or a final like call out to them.
I would just say take a leap of faith. At this point in time, you really don't have anything to lose for most loan officers, just because most people are not making money right now.
Got it.
Yeah, I mean, I would kind of echo that and just say that stability is what we all want to shoot for, and also the idea. I think our generation, right? A lot of younger people are trying to explore this avenue of being my own boss, having that flexibility, but also being within, a community of people that can support you. That was huge for me, because I don't want to go start a storefront, and if it fails, it's all on me. I got no one to call, but I call you a lot, right?
I love it.
I call all these people a lot. You have a community of people here that are, moving forward to the same goal. So the fact that you can have the autonomy to own your own business and run your own agency and make these decisions for yourself on how you see fit to run your team, but also have this, network of individuals that are full-time there to support you, is unlike any other business model that I've seen, which is why I'm so passionate about it. Because if I try to go start an e-commerce store, all these things, I can go buy ebooks, but I don't have anyone that's going to be with me. Like, hey, I've been through this before. I've done this. I've preceded you in this. This is what you should do. And that is 100% invaluable. So this is the right place to be for anyone wanting to run their own business.
Well said, Morgan.
I had to outshine you in the whole Betty spiel.
Outshine me all that you want. I don't even need. So yes, and so Morgan and Ryan have done tremendously well so far, and so just being clear, there's a lot of loan originators that come here and fail because they failed in loans already, and just because you came from an industry and you come in insurance, you still got to work hard. You still have to learn a skill set. You still have to care about clients and care about your own personal growth, so that you kind of learn the things you don't know and how to navigate through them. But in doing so, that's where our company is continuing to grow, and we're having record months after record months because we put agents first by paying them the most in the industry, access to leads, no fees to get started, and training by the best in the industry. Is we're the #1 company in our space, so we have the top producers. So tremendous. Thank you both for sharing that.